Crypto markets continue to decouple from stocks as key resistances get tested because capital flight out of the Middle East appears to be triggering more crypto adoption. Vol markets remain cautious as put demand persists despite the rally. All this and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran Lakha from Options Insight. I've got my man Dave from FRNT. And today's special guest coming in on video link again is Matt Hougan, CIO of Bitwise Asset Management. Welcome to the show, Matt.
Thanks, guys. I'm so excited to be here.
Yeah, great to have you on.
Yeah, good to have you on. All right, as is customary, actually, before we get into the interview, we did have a competition on our 100th episode. And the winners of that competition are coming on screen now. I want to get that out of the way, otherwise I know I'm going to forget. Yeah. So congratulations to all of you who won 100 USDC on our 100th episode. But now let's get back to it. So what is customary is we always ask everyone how they got into crypto, when they got into crypto, what made them make the leap. So do you want to tell us a little bit about that?
Yeah, sure. So I joined Bitwise full-time in early 2018. Before Bitwise, I was the CEO of ETF.com. I spent more than a decade in ETFs. And after I sold that business and went looking around for the next thing to do, crypto was obvious to me. The reason is that ETFs today, everyone knows and loves them. They're the only way people invest. But in the early days of ETFs, everyone hated them. They were called weapons of mass destruction. There were US congressional hearings about them destroying the American dream. People called them un-American. They didn't trust them. They were going to blow up the market. Yeah, but I watched ETFs go from this hated technology to the main way people invest, a massive bull market. And I wanted the next thing. I was fortunate to have some good contacts in crypto. Spencer Bogart of Blockchain Capital used to work for me at ETF.com. And he introduced me to Hunter, and I've been in crypto ever since.
Why were they considered weapons of mass destruction?
Because they were new and threatening to the financial establishment.
Oh,
that story sound vaguely familiar?
Yeah.
I mean, the thought was in particular that fixed income ETFs, which take bonds that are illiquid and put them in a liquid wrapper, would somehow cause the market to explode. But it really was the same sort of FUD that we've seen in crypto for so many years. It was the Financial Times saying ETFs are going to destroy capitalism. It's really remarkable to me to see the story. And what I knew about ETFs was that they were better, faster, cheaper, more tradable. Mm-hmm. And the pattern matching to crypto was just way too obvious for me. And we're like halfway through that journey. But eventually crypto will be as mainstream as ETFs are today.
Nice. Let's all hope so.
I guess within that, like when we're thinking about access, obviously, I mean, we speak a lot about the ETFs being the gateway and the access gateway for traditional institutions into the space. Obviously, we've had, and the big trade last year, if we want to call it that, was this explosion of the digital asset treasuries and everyone trying to copy the sort of MicroStrategy playbook. How do you think about the ETFs versus digital asset treasuries and the competition there, or do we need the DATs if we've got the ETFs? What's your thinking around that?
Yeah, you have to think of it like a leapfrog, right? The original digital asset treasury, MicroStrategy, was a regulatory arbitrage. There weren't ETFs. People wanted to buy Bitcoin in a ticker. And so MicroStrategy existed. And for that reason, it had this beautiful flywheel of trading above its net asset value, right? And then it could issue more shares and buy more Bitcoin. It built this tremendous balance sheet, absolutely incredible. The challenge is once you have ETFs are strictly better than that, right? Because my ETF, you can get in and out on a daily basis. MicroStrategy, you can get premiums and discounts, strictly better. And so now you need digital asset treasuries to move to 2.0, that they need to leapfrog ETFs or they'll vanish. If all they're doing is what my ETF is doing, I can do it better. And that includes buying the asset and staking it, right? I can do it at extremely low cost. So they have to do something different or they're not going to survive. What does different mean? Well, MicroStrategy is able to do things like Stretch, and it's preferred because it has this enormous balance sheet that it can write debt against. You could also see digital asset treasury companies that do things like write option overlay strategies or lend out their assets. They can do interesting things that a hedge fund might do. But if all they're doing is what my ETF does, I can do it better, faster, cheaper, and I'm going to win, and they're going to go out of business. So I think of it as this like leapfrog motion where they have to stay ahead.
So I hear that as basically saying that if they're purely tracking beta to Bitcoin, they're going to die. So they are forced down the alpha route where they have to add some alpha, right? Whether it's yield enhancement alpha, whether it's like trading around the volatility, wherever it is. But if they don't do that, then yeah, there's no real reason for them to exist.
Extremely well said. Yeah, that's exactly right. They're dead men walking if they don't do that.
Well, you heard it here first.
Look, I think there's a space for DATs. I think there is things you can do, just like there are index funds and active funds. I think that's a really good comparison. There can be ETFs and then there can be DATs that are doing very interesting things that I'm very excited about. I think there'll be a moment in the market where they're dramatically undervalued because people don't get that there is this DAT 2.0 thing happening. I just don't think it'll be evenly distributed. There will be winners and there will be losers. And the market will need to differentiate between the ones doing something hard well and the ones doing something easy poorly. And we'll get two different outcomes from there.
So like there might be like relative value trades between like DATs and ETFs like yours, for example. Like to me, it kind of the idea that if rates get slashed hard, let's say the market crashes, rates get slashed, then these DATs, if they're alive still, could they arguably raise money very cheaply like Strategy did and then buy a load of crypto, get levered up, so then in a bounce, they will massively outperform what an ETF would do. So like trading that kind of arbitrage, it's not arbitrage, but trading that spread between DATs and ETFs could be quite interesting, right?
Yeah, I think that's exactly right. You have to think of them as part of the capital stack. They're just not the beta. And I agree that, yeah, there'll be these interesting moments where the trade is on and very exciting, and then there'll be moments where it's off. And it'll be up to people to understand which moment we're in.
Good stuff. Matt, you've been yourself and the team at Bitwise. I think you've been so good for the space in flying the flag and certainly to bring which we, Imran and myself, from an institutional background, from traditional background coming into this, you've really sort of flown that flag and particularly in the institutional space. I'm interested, and given you've been having these conversations for a lot of years, and obviously you've seen a lot of change and the adoption. What's the sales pitch that you're giving now when you're going into these institutions, particularly and family offices or whoever who still aren't invested in Bitcoin or crypto? What's the sales pitch that you're giving now? How has that changed? And yeah, I'm just interested to know what that sounds like.
Yeah, I mean, I will say that it's changed dramatically, and then I'll say what it sounds like. In the early days, you really had to spend all your time explaining what this technology is and how it functioned. We would go into offices and like put down a computer and pull out the Wi-Fi card and pull out the speakers and show how to create an air-gapped computer and do cold storage. It was that level of like 101 education because people weren't going to touch something that they couldn't trust. And so we did that for years. Now, when we go in, it's really about making the argument that there's still asymmetric upside in something like Bitcoin. I can tell you how I do that if you're interested. Talking about how to play the growth in stablecoins and tokenization, and then also talking about the role it plays in a portfolio. The beautiful thing of what's happened is sort of Bitcoin has been stripped and crypto has been stripped of this, other mentality. People can look at it as an asset and then it fits in really well. But yeah, we talk a lot about the asymmetric returns and a lot about sort of the mega trends supporting it and why it fits well in a portfolio.
So yeah, tell us a little bit more about the asymmetric returns, why you're still a believer, because that's something I've been grappling with a little bit over the last year. I'm thinking with all the institutional adoption, with all the call overwriting and things like that, does that kind of take it out of that you could do 10x in a year like you used to do in the old days? Is that asymmetric upside still there? And it sounds like you think it might be.
Oh, it's massively there. Of course it's there. I'll do Bitcoin really easily because I think there's a very conservative case for Bitcoin to get north of $1 million a coin. And here's the case. If you think of Bitcoin as digital gold, there are only two factors that matter. It's how big is the store of value market and what Bitcoin's share is, right? Right now, the store of value market is $40 trillion and Bitcoin's share is about 4%, which is how do you get to $75,000? Just simple math. The mistake people make when they evaluate Bitcoin is they say, well, maybe Bitcoin will get to 25% of the market, right? I could imagine it being a quarter the size of gold. And they're like, okay, then that could be a $10 trillion market, and maybe it's a 5x from here. But that math is wrong because the gold market, the store of value market, has been growing dramatically for the last 20 years.
Mm-hmm.
When the gold ETF launched in 2004, the entire store of value market was $2.5 trillion. It's had a 12.5% CAGR for 20 years. If you continue that for 10 years, right, to 2035, Bitcoin only has to take 15% of the market to be worth $1 million a coin. If it takes 30% of the market, it's 2 million. If it takes, you can go on from there. You can get to these really dramatic numbers with really conservative assumptions. All you're saying is that the store of value market needs to keep growing the way it's been growing as governments print more debt, not grow faster, grow the way it's been growing. And Bitcoin has to go from about 5 to 15% of the market in 10 years. That seems like almost a slam dunk, right? Almost a slam dunk. It's a very conservative assumption. Now, that's not 10x in a year. If you want 10x in a year, I think those opportunities exist. I think some of the DeFi apps, as tokenomics improve, have 10x style in a year appreciation potential. Mm-hmm. But on the majors like Bitcoin, you're still talking about an asset that could 20x from here with relatively conservative assumptions in 10 years. Good luck finding that in stocks or bonds.
I'm gonna have to play devil's advocate now, right? So what would you say to the people who look at the last 12 months and say, store of value, really? Let's compare it to gold, right? And gold's done what, 50, 60%, and Bitcoin's flat, right? So what would you say to those people?
Yeah, look, Bitcoin is an emerging store of value, so you can't expect it to perform exactly the same as gold over any short period of time. Gold had an idiosyncratic driver, which is central bank buying. Central banks aren't buying Bitcoin. That's what lifted the price of gold. It wasn't retail buying. It wasn't financial advisors buying. It was central bank buying after the US seized Russia's treasury assets. That inflected the price of gold. Bitcoin had its own idiosyncratic moment, which is this 4-year cycle. It's a classic crypto winner. And so you had idiosyncratic drivers that caused the price to separate. But go back to COVID, right? COVID to today is the great inflation of our lifetime, right? The dollar lost 25% of its value. Bitcoin is up 15x since the start of COVID. That's a pretty good store of value, right? Gold doesn't always go up. So Bitcoin is not going to just do gold's return times 5. There's no world in which that works. You have to pan out a little. It's emerging. It's doing great. Since the start of the Iran war, Bitcoin's up, 14%? Gold is down 5. Is gold broken? I think we need to pan out a little bit.
Yeah, so zooming out often helps push back on that. Yeah. I agree. Do you have any concerns over the quantum threat? Because a lot of people were blaming that for the underperformance that we had in crypto over the last few months, as we sold off. Is that something that keeps you up at night?
Well, so there are 2 levels of concerns I have there. One is that it's a challenging problem that I think the Bitcoin community will solve, even though there's some edge cases around what to do with wallets that will be complex and difficult and painful. But the fact that we're talking about it and dedicating resources to it means I suspect that we'll solve it, right? So there is a risk, but I think we'll solve it. But I do think it's dramatically dragged down returns. And the reason for that is that when I go and I speak with sort of investment committees, which are like 8 guys at an advisor that manages $50 billion. They're all between 40 and 60. And I have to convince all of them to allocate to Bitcoin. What happens and what's happened for the last year is at the end of the meeting, someone raises their hand and says, what about quantum? And I can explain what's going to happen broadly with quantum, but that process takes 6 to 9 months. And it really has slowed down institutional adoption. So long term, I think we'll solve it. It's challenging, we'll solve it, but it is slowing things down, and it has contributed to the negative price performance. You can even see that in the relative performance of Bitcoin and Bitcoin Cash over the last year, which are very different charts. So I really do think quantum has had an effect, but I think we'll get past it.
And what do you say? I guess kind of progressing from that. How are you seeing? I mean, something that, and actually, it's probably worth just thinking about. The last few months and price action and what's driven things. I mean, when I look at the world, I actually think like obviously we've had this structural selling in Bitcoin from some and be it the 4-year cycle kind of theory, people selling into that. Q4 we had, in my view, we had this tightening of US based liquidity, and then we've kind of come into New Year, and then we've had the whole like software tech sell off that kind of Bitcoin's got caught in, which hasn't in my mind made a lot of sense in so much as I kind of think as Bitcoin and crypto as an actual complement to AI, and particularly in like an agentic AI world. So it's not an obvious thing to me that Bitcoin should sell off. How are you thinking about AI and crypto being either complements or not? And what's your thoughts around that story?
Yeah, so I think they're long-term very complementary. Actually, outside of Bitcoin, I think AI's benefit to stablecoins tokenization and the plays in that space are absolutely enormous. I also think that if you believe in the AI-driven deflation theory, which is that it'll spark a massive deflation, governments will meet that with huge amounts of money printing. That's what we did on China entering the WTO, which was the last major deflation. We just swamped that with new liquidity. That's positive for Bitcoin as well. So I agree that it's a long-term positive catalyst. On the recent relative performance versus software stocks, I actually am somewhat inclined to believe that that's a statistical anomaly, but I don't know for sure, right? It's entirely possible that there were two idiosyncratic events, which were the 4-year cycle and the October 10th deleveraging, and then a freak out about software stocks. And that the recent correlation is just like a short-term anomaly. But I could be wrong about that. Long-term, I think it's a positive catalyst. Short-term, it's something to think about, but I haven't found a reason for those two to be linked as closely as they have been in those charts that everyone circulates.
Speaking of correlation, like, a lot of people think of Bitcoin or crypto in general as just like a correlated asset to the NASDAQ, for example, right? But it's pretty clear that over the last 6 months or so, that correlation's been breaking down, right? We were seeing crypto under pressure since October last year, whilst equities continued to make new highs. And now in the last episode with what's going on in Iran, we've had equities under pressure and crypto's finding a bid. So, what do you make of that sort of lowering of correlation? And do you see that actually as a net positive for crypto just because it has more room in portfolios if it has a lower correlation to stocks?
Yeah, absolutely. The lack of correlation is one of the primary reasons that institutions allocate to crypto. If you look at like BlackRock's marketing material, the first thing they talk about is the low correlated nature. And even when it was sort of trading somewhat like stocks on a long-term basis, if you look at 90 or 180-day correlations, they were still relatively low. So it's definitely the case that as we see this divergence, that's beneficial. Long-term, though, you have to assume it's going to be relatively lowly correlated, because what fundamentally drives Bitcoin and crypto is just different than what fundamentally drives most other assets. There are times when macro trends can overwhelm things and all correlations lift to one. But I think this paradigm where they have different returns is actually the normal paradigm across long periods of time. And it's definitely helpful when we go and speak with institutions.
And what do you put this recent outperformance down to then? Do you think it is a case of capital fleeing the Middle East because of what's happening?
Look, I never think there's a monocausal explanation for these sorts of moves. I think to an extent, capital fleeing the Middle East is a big piece of it. To the extent crypto sentiment hit all-time lows, right? Remember, it was 4 on the crypto fear and greed. That's a pretty asymmetric reading where there's only normalization. We've seen that normalization happen. I think I have this personal thesis: the crypto winter started in the early parts of 2025, not in October. And so we're actually deep into that winter. And I think there's a natural cyclical bottoming process. And I think the world is so crazy that crypto looks sane, which I think is helpful for crypto as well. Look,
like an off-ramp,
you have
right?
these mega trends. Yeah.
It's like an
And
off-ramp.
I think that process helps.
Yeah, it makes sense.
Yeah, I mean, like my kind of thought, Matt, on it has been, and again, it might just be a cyclical thing, like you say. I mean, certainly if you compared actually the gold Bitcoin ratio, that bear market, if you like, started early 2025, and maybe we're just bottoming out of that process, which kind of makes sense. The other thing for me is that I think that, and I always say on here, you know, I think Bitcoin captures both the far left and far right tails of the risk distribution. Like, we're the ultimate risk on, liquidity is pumping, everything's pumping, and Bitcoin and crypto's pumping the most on the right tail. And then on the far left tail, when we're seeing a challenge to existing political and economic structures, then Bitcoin sort of, you know, non-sovereign, decentralized qualities start to win out. And maybe we're seeing that. And in between, until this point, you know, risk has generally been we've been sat somewhere in the middle of that risk distribution. Risk has actually been quite benign. Obviously, you know, equities hitting record highs. We had a little bit of a wobble with the AI kind of FUD. So maybe we're seeing that return to actually performing its function as a hedge against, again, on that far left tail. Or yeah, maybe it's just coincidental that the timing came at max fear, cyclical bottoming out process, and that's where we're at. That's where we're at.
Yeah, I think both of those things are right. Just one note on my thesis that we entered the winter in January. You can kind of look at in 25. If you look at crypto, there were really 2 markets. There were Bitcoin and ETH, which did relatively well because there was a huge amount of ETF inflows. And then there was everything else, which just went straight down, right, from January. Alt layer ones were down like 70% in 2025. And if you look underneath Bitcoin and ETH, outside of those institutional flows, they were selling from long-term wallets, that were selling from whales consistently throughout the year. And so I think you had sort of 2 markets. You had institutional crypto that like kept going in 2025, but crypto retail really started to punk in early 2025. So I really do think we're pretty deep into the crypto retail winter. We may be in the spring. So I think that cyclical element is pretty important, and maybe was papered over by the ETF flows.
Yeah. Is that cyclicality, how much is that impacted as well by things like the AI trade that was, I guess, very sexy for retail? You know, how much is that taking attention away from the crypto space?
Huge. Yeah, it took away the attention investor. You had the AI trade, you had the metals trade, right? Those became the hot dots. Specific to AI, you had miner selling of Bitcoin, which is still continuing. It's like a negative drag on the market as they capitalize their Bitcoin to invest in AI and HPC centers. So I do think that those were big pieces of it.
Do you see like the other tokens getting ETFs eventually? Obviously, you're in the ETF business, right? So you'd probably be quite well placed to answer that. I mean, because I think people are getting excited about the idea of other alts getting in there and having an uplift from the ETFs. Like, what's preventing that from happening?
Yeah, I mean, technically, what's preventing it from happening is you need futures contracts, basically, in order to have an ETF. You need futures contracts on a regulated exchange, and then you're allowed to launch an ETF in the US.
Okay.
I think eventually we'll get them, but I actually don't think that's going to be the biggest driver. I think the next wave of crypto ETF growth will be thematic and index-based products. I think people will want to bet on like DeFi tokens or stablecoins related assets, or, you know, pick your next theme. But I think that's what you'll see drive the market more than an idiosyncratic ETF on even something, I love many of the DeFi apps, but they're billion or $2 or $3 billion projects, right? That's very small for an ETF market. So I think it's going to be these thematic ETFs that are the next wave of growth.
Do you think the retail money comes back into the space? Like, does price just become narrative and it comes back, or are we now in for the institutions are just going to dominate this space? And if so, how does that change what a bull market looks like for Bitcoin and crypto?
Yeah, look, I think the institutional money is going to come in for the next 10 years. Institutions still on average have 0% allocation to crypto. That's the wrong allocation. I think they'll get to 5. This week alone, I'm meeting with Morgan Stanley, Wells Fargo, and Merrill Lynch. That's Monday, Tuesday, and Wednesday. And that money is going to flow into the market. It will mean that the bull market is steadier, lower volatility, and longer lasting. That's my guess. I do think retail money will come back into crypto as you see prices accelerate. I don't think it's gone to AI forever. I also think it's okay to like AI and like crypto at the same time. I do. And I think we can hold both of those thoughts in our mind. These are the largest markets finance has ever gone after. It's intelligence and money. We've never sort of tackled those sorts of TAMs. I think it's fine to have both. But I think retail money will come back into the market as prices increase. It always does.
Yeah. I kind of, it's funny to me when people say to me, oh, like, Dave, you realize like this is .com all over. And I kind of always say, well, I hope so. That's the bet that I'm making in this space. And everyone forgets for the .com crash, the biggest, most profitable companies in the world came from that period. But obviously the question within crypto is, am I holding Friends Reunite or am I holding Facebook?
Right.
Do you feel as I do? So I'm perhaps trying to lead you here, but I'd be interested to get your thoughts. Like, it feels to me there's probably a lot of projects that don't recover, that they've not, they're not providing utility, they're not seeing a network growth, so they will just fade away and die. And then we kind of get an emergence of more quality networks that actually then attract a concentration of capital that actually then do accelerate. Have you got any thoughts around that?
I strongly agree. Look, I think the median crypto asset will go to 0. And maybe actually 80% of crypto assets will go to 0. And I think it'll be an oligopolical market with the largest names taking the largest share. I think that's the direction we're going. It's for investors, actually, to me, it says something interesting about how investors should approach the space. I think a lot of crypto investors spend a lot of time trying to pick the one winner and being very tribal about that. I think they'd be better placed trying to isolate the losers, screen those out, and then just own everything else. I think it's easier to find networks, as you suggested, that are not scaling, that are not seeing adoption, that are not seeing uptick. And if you remove those and then just agnostically bought everything else, I think that's pretty close to the optimal portfolio. So I think people should skew their alpha seeking actually to the negative side and screen those out and just buy everything else.
Yeah, no, interesting. And I guess like within that, I think one of the biggest successes to come out of this space so far has obviously been stable coins. The way we're going, in my view, in 5 to 10 years, probably, stable coins will dominate global payments. And obviously, in theory, that's going to be a benefit for the likes of Ethereum, particularly given how many stablecoin transactions are settled on that network. What's your thoughts in terms of why Ethereum's kind of underperformed? And also, just going back to a question I asked earlier, when you're speaking to institutions and your pitch for Bitcoin, how does the pitch differ for the likes of Ethereum or Solana when you're going into these institutions?
Yeah, I'll answer that question first, and then talk about why I think it's underperformed. Although it's up on a year-to-date basis, about 23%, which I think is notable. I mean, on a 1-year basis. Apologies. We sort of we talk to institutions about there being 2 big markets right now. There's Bitcoin, which is money. I think it'll get to $1 million in the next 10 years. And then there's stablecoins and tokenization, which are these freight trains bringing trillions of dollars of capital onto markets. I agree with what you said. I think in 5 to 10 years, essentially all payments will be stablecoins and all assets will be tokenized. And you're hearing the largest voices in Wall Street saying the same things, right? So I think those are fait accompli. And then we talk to institutions about how to allocate to this space, which is a mix of assets like Ethereum, Solana, associated assets like Chainlink and DeFi apps, and then companies that are building in the space like Circle and Coinbase and Kraken, and both in public and private markets. That's sort of the stablecoin portfolio. As far as ETH, I think there's only one question really left on ETH, which is L1 block space a commodity? Because if it's a pure commodity and investors are ultimately don't care if it's Ethereum, Solana, or any other L1 or L2, and things move seamlessly between them and it's purely commoditized, it's going to be very hard for Ethereum to capture enough value to justify its current market cap. If block space is not purely commoditized, if you can charge differentially for different block space, if there's brand value, if there's brand moats, if cross-chain is not actually as easy as people imagine it might be, then I think it's dramatically undervalued, because the scale of transaction activity on stablecoins and tokenization based on its current market share, and it's still winning many of those mandates, is massive. I think it's like underestimated by people by a factor of like 10,000. Particularly with AI agents coming into the space, the number of transactions is potentially massive. And so I think that's really the question people are asking around ETH. Ultimately, is L1 block space a pure commodity, or is there differentiated pricing and value capture? And I think it's a really interesting question for what it's worth.
It seems like, all of the TradFi kind of players that are trying to go into the space are looking at Ethereum as the place to do it, right? Because it's the most trusted one. It's where the most activity is, like you said. So it seems like there's some first mover advantage there that is going to persist, right?
Yeah, I absolutely agree with that. I mean, that's what you're seeing in the market. That's what I mentioned. I think it'll be like an oligopoly. You're seeing Ethereum win a lot. You're seeing Solana win a lot. And then you're seeing others sort of competing on the edges. Certainly, if you're building on Wall Street, you don't get fired for building on ETH. You may get fired for building on the 10th L1. Exactly. Right. That's and so as a result, Wall Street people don't want to be fired. So Ethereum is winning a lot, and Solana is winning a lot. And I think they have a very good chance. For what it's worth, I'm bullish on both assets. I ultimately don't think L1 block space will be purely commoditized. And I think there is a lot of brand moat and other value in those assets. So I'm really optimistic on them. And I do think they're winning a larger and larger share as this market expands.
So you said we went into a bit of a crypto winter at the start of last year. Do you think we're coming out of that now? So like, would you imagine year-end targets for this year are materially higher than where we are now?
Yeah, I absolutely do. I don't know if we'll get back up to new all-time highs this year, but I think the year-end will be much, much better. There are just some really positive long-term forces in crypto right now. Stablecoins are a juggernaut. Tokenization is a juggernaut. Concern about debasement is a juggernaut. Improving tokenomics is also something that's happening. Improving sort of centralization on the L1 and things like ETH is also something that's happening. You're seeing blockchains execute better on their technical roadmap than I've seen in my 8 years in crypto. These are pretty big trends, and you put them all together, it's to my mind a very positive environment. Could there be scenarios where it doesn't occur? Of course. Clarity fails, or the world goes into a massive recession that's hugely risk off, or there's some other unforeseen issue. But absent those, I think we're materially higher by next year, by the end of the year, and then I think 27 is a pretty great year for crypto.
How you mentioned clarity there. How important is the Clarity Act in your view, and how much of a trigger would that be if it was to get passed this year?
Yeah, I think it would be a big trigger. The reason it matters is that we're building on a regulatory foundation of sand right now. The regulations are really good in the US. The regulatory environment is really good, but we're one strong swing election from having a very different regulatory environment because it's not in the legislative layer. Now, it won't go back to the Gensler era, but it could go back to something worse than we have today. And the risk of that is preventing Wall Street from doing as much investing in the space as they otherwise would. Now, they're doing a lot. There's M&A activity, there's building, there's hiring, but I think it would be 2, 3, 4 times bigger if we had a firm regulatory framework and they weren't wondering in 3 years, will Elizabeth Warren be the head of the SEC? So I think it is important if it passes. If it doesn't pass, I think it's possible we could go back and test the lows. If it does pass, I think to some extent it's pretty clear sailing for crypto into the end of the year.
Some of these crypto stocks seem to be, I mean, the stablecoin stock Circle has doubled in the last month. So I was thinking that was pricing in like quite a high chance of clarity passing, basically. But I don't know what the reason is. But have you been paying attention to that?
Yeah, Circle's been a remarkable performer. I think it's pricing in optimism that clarity passes.
Yeah,
I think it's also pricing in the fact that it's been doing relatively well on a market share basis. And maybe people think it'll get a bigger share of the next $1 trillion in stablecoins than it has of the existing stablecoin market. But its performance has been really remarkable. I think it's a very interesting stock, even at these prices.
I don't know like what kind of network you've got in Washington, Matt, but what's your sense on, I mean, it feels like a 50-50 flip a coin on whether clarity gets done. And also it kind of feels there's a race. If it doesn't get done before the midterms, then it's not getting done. What are your views around that?
Yeah, we pay these consultants in Washington to advise us, and they tell us it's like 50-50. And I think I could get that with a coin flip. Why am I writing you a check?
Yeah.
That's the unfortunate reality. I think it's really hard to know at this point. I do think the window is shrinking. You can see the poly market odds, which I haven't looked recently, but they vacillate between like 65 and 40. Washington is harder to predict than almost anything. I guess if I had to bet right now, I'm skewed a little bit on the downside of it passing.
Mm-hmm.
I think Washington's distracted and it's complex issues, but who knows?
Yeah. Do you think as well, like, I mean, we've had various guests on here and trying to think about Bitcoin's underperformance, and you know, one of the things that people brought up is the fact that it's become so associated with Donald Trump and the US that you know, a reason for some, at least, like, you know, wanting to be short it is to kind of not be associated with the Trump sort of administration. But I don't know if you've got any thoughts on that. My worry, I guess, is whilst I see from an institutional point of view and from the seat that I sit in at FRNT Financial, you know, you're seeing now all the institutions kind of understand crypto, certainly understand blockchain technology. So all the banks are kind of coming into the space in one form or another. My concern, if you like, is that it's become such a bipartisan issue in the US that it's kind of almost, it's like, for me, crypto should be a neutral, you know, it's just another asset class. But yeah, it kind of feels that it's a very now Trump Republican asset class, that if the Democrats take the House and everything in the midterms, does it become right? Our first thing is to dismantle everything that's sort of gone on before, or is there an acceptance now, and, you know, in Washington about sort of crypto generally, that we're not going to reverse, you know, the stuff that the Trump administration's put forward?
Yeah, I think you're right that the partisan nature of crypto is a risk to crypto because you could get the reactionary movement. I do think we're never going to go back to the Gensler era, right? When you have BlackRock and JP Morgan and Citigroup and everyone else building in this space and investing substantial money, those are enormous lobbies. They're not going to like make stable coins illegal or ban DeFi entirely when Apollo is investing in Morpho tokens. I think Washington's a little more Machiavellian than that. So I don't think we're going all the way back. But I do think the partisan nature of it is unfortunate and is a risk. That's one of the reasons clarity is so important, because clarity will turn that sand foundation we talked about into cement. And even if there are political changes, nothing will be able to undo that easily. That's one of the reasons I really hope we get it.
Yeah. Yeah.
All right. Well, I think that's a good point to end on. Appreciate you coming on the show. Brilliant discussion.
Yeah. Thanks for having me. This was fun.
Yeah. Yeah. No, thanks, Matt. It's been, we wanted to get you on for a while. So great to get you on.
Take care. Cheers. And guys, remember, like and subscribe so we can get amazing guests like Matt on every week. We'll see you next time.